Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now live trading event. Hope you're all doing well out there, team. Bedding in nicely to the week ahead so that we can get this week rocking and rolling. That's what we're hoping anyway. Not got too much going on today. We did have the RBA interest rate decision out early hours of this morning. That was at 3:30 a.m. That was an interesting one, actually. I mean, obviously it was forecasted, but they have actually gone up from 3.85 to 4.1%, which is pretty big. It's pretty big news. I mean, if we look at the Australian dollar as a result of that, we did get a pretty bullish reaction from price action. And the good thing about this is it has forced the price into liquidity at the 121.30 area, beg your pardon, which means we can now get ourselves ready for our trading. Our trade idea for the market report. This will be a relatively long-term one, probably last the duration of the rest of the week and then go into next week as well. Good afternoon to you, D. Good to see you, buddy. Good evening to you, Matthew. And we've got H&C in the house as well, so good afternoon to you, sir. So yeah, we've got some decent. I mean, it's decent news off the back of the RBA. I haven't actually read the minutes from the RBA event, so I can't tell you too much about what the central bank was saying. So yeah, it's good news for us ultimately. We've got the market price pushed into liquidity. We've now reached this area, and I would anticipate there to be some kind of reaction, hopefully a knee-jerk sell-off. If we look at the daily time frame up here, just to reaffirm what we are anticipating, we've come to the end of a whopping great move here in the AN. We've reached liquidity. This is a point that comes back from this area in here. Absolutely stunning level of commercial interest. Really, really nice level. Huge price action push away from this area. We've also got the rebound retest motion, which takes place inside here, which is a telltale sign that this area is being used for liquidity pools. And so therefore, once we see this, we can definitely get a good idea of what's going to happen when we get there next time, which is ultimately where we're currently sort of trading. Now, looking at the 15-minute time frame, we've also got a nice break of structure point that can be utilized, and this does give us a lot of flexibility when it comes to our stop loss. So if we just drag our zone across here as the break of structure, we are looking incredibly aggressive on this one. So we've got an entry, we've got our target profit all the way down there. That's yielding immediately a 1 to 4.3, but we're not going to go for that. We're going to have our stop loss nice and high up there at around a 1 to 3. Really nice return, 3x return. And we're beating that previous high as well. So we've got the sort of major high of this area, which is nicely inside the stop loss. Entry down here, the first major roadblock that we're going to hit, this level down there. And that roadblock, ladies and gents, is going to yield us a 1 to 1 before we even get on the way with the rest of it. So really nice setup overall. Everything looking squeaky clean about it. If the market wants to push higher than our stop loss at 121.60, this is a runaway train. We're not going to slow down. We will get the breakout at 121.80, and then we'll want to be long anyway. So I don't want to take the risk in having the stop loss all the way up for a 1 to 2.5 at 121.80 or a 1 to 2.3 or whatever it may be. I like the sort of semi-aggressive nature of the 1 to 3. I think the stop loss is well placed. We've got several areas in here that will be of protection if the trade triggers. And yeah, everything about it looks pretty damn good. So that one is about to go live. I'm going to download that one. That's going to turn from a pink to a red, which means it's going to be placed in market via a pending order. Hey, good evening to you, Braden. Good to see you, man. So let's move our way down the list then. We've got a few things to work through this afternoon, of course, off the back of the RBA last night, where we had the increase in their rates. Also, we do need to be hyper aware at this stage of tomorrow. We have the BOC interest rate decision. We don't want to be in anything Canadian dollar by 1:45 tomorrow afternoon. We also have the federal interest rate decision at 6 p.m. with a press conference following up by 6:30. So we do equally need to be sort of very aware of that. Okay, so there's things going on tomorrow that we do need to be kind of careful about. Which is going to have an impact on our intraday trades, of course, in the FX space until those events take place. I'm not overly concerned about the dollar, and that's just because we're going to get the full scope of tomorrow to trade up until the evening. So I'm not too worried about that. The downside, however, is the fact that the markets will be on pause for the Fed. Everybody wants to know the Fed's next move. Everybody wants to know what's going to be happening behind the scenes, and so they will be very, very conscious of that. So there might not be there might not be so much trading activity or whatever before we get to that point. But it doesn't mean that we can't try. It doesn't mean that we can't sort of throw out a couple of trades if the necessary setups look good and make a few quid beforehand. The USD CAD's not looking too bad. We've got this area in here. We've actually just got a fresh breaker structure. There's no point manipulating that zone anymore. It is what it is. We've got the break above. We've got the close. We've actually got the open of the next candle, and it's come back down to retest it. I'm thinking we could just get a nice little intraday trade out of this one. We've got the area in there. We've got the rebound, retest, secondary retest, and then the big push lower. So we're not talking about major margins here. We have the breaker structure point, which is above that area in there. And then we can line ourselves up with our entry, the target profit at around 137.17. And of course, the stop loss down at 137.059. Very, very little intraday trade, but still it's going to yield us a 1 to 2.2 with a spread of around 0.03. So very, very tight spreads. We're going to get the full scope of that risk-reward ratio. Again, really nice little intraday trade. We do run the risk, of course, of being stopped out because the stop is pretty tight at 3.7 pips. The market doesn't really need to move in order to take us out, but I think if we can break this high, then it's going to be a pretty good shot straight the way up. If we actually drag this backwards, okay, we can see that once the market's broken above here, we did have one failure, but we also had a secondary success. So we broke above, we come back down, we retest, and then we continued straight up to the target profit. So, you know, it's not foolproof. In essence, it's never a guarantee. No such thing as a guarantee in our markets, but I do like the idea. So I'm going to have a stab at that one and put some money on it. It also mitigates the time exposure as well. I don't want to be in the USD CAD for too long if I don't have to be. So having a very short-term intraday trade like this, it does make sense. I will send that out to everybody now, and I'm going to actually trigger this trade. So not going to place a market order. I may place a market order, to be honest, at this rate. I'll place a pending order if the market doesn't reach that entry. Right, yeah, I'm going to set up a pending order actually on this one. I'm just going to hustle with it. So entry is a breaker structure, 130. Let's say 137.10. Let's say 137.10 for the entry. Stop loss 137.06, and the target profit at 137.18. I'm a little bit of a sucker for round numbers. And go. That's go time. Okay. Right, moving on. Let's have a look at the NZD-JPY. Okay, not bad. We've got some pretty decent structure in this one as well. So, of course, we're selling... we're buying the New Zealand dollar in one. So if we're looking to sell it in this one, we're essentially doubling up our risk on the New Zealand. Do have to take that into consideration, but I think with the fact of the daily level being where it is at the moment on that New Zealand dollar, it's probably going to make sense to see a downtick in this one as well. We've got a decent floor in there. That's really nice. So a messy bit of price action over the course of the last couple of months. But it's also quite easy to navigate because the market has been ranging for a while. I don't like the fact that, well, I guess really the reality is we haven't actually been down there yet. I was trying to meet the previous low, but frankly, it's not really come down to the point in which I would deem it at liquidity, which is this area in here. Yeah, do you know what, team? That's actually a really nice setup. The margins are a little bit wide for me. I don't particularly like the idea of holding on to it all the way back down to 92.10. But I think if we can look at something like this, which is ultimately the breaker structure that we would utilize for a long, and taking it down to there that's going to be okay. Now, if we use this here as the breaker structure for the short, then that reduces our trading margin and the exposure that we would have at market quite well. I have a stop loss at about there for a 1 to 2.36. I'm thinking, I mean, could we just take could we have a long on the other side of this as well? Have a split trading opportunity. This is the no man's land, a breaker structure above for the long, breaker structure below for the short. New Zealand yen's got super tight spreads as well, so we don't need to run the risk of any spread variations here unless we don't have the trade trigger until this evening, you know, overnight. Hey, good afternoon, Cortim. Sorry I missed your message there, buddy. Good to see you. So I'm thinking a bit of a split decision here. I think we could have both of these. I think I prefer the short, not just because of the fact of the risk-reward ratio, but because of the market structure itself. The market, on the last attempt that we had to the downside, we did not actually breach liquidity. So I would be on the side of the market dropping first rather than rallying first. But that being said, we're talking about a very modest trading opportunity on both sides of the market here. So I don't think there'd be any reason for the market not to be able to reach that 93.27. We don't have any major fundamental events that are going to be moving against us. We've got the BOT at 10 to 12 midnight tonight. And that's it. Yeah, so I'm gonna go for those two as well via pendings. All right, next up, let's get into some pound stuff. Pound against the dollar. Very nice. I see. This is what happens, right? We go through a couple of weeks of things not looking great. We have to wait for the setups, and then all of a sudden, everything looks like it's setting up, and it's always the way it's been. It's always the way it happens. You just have to be patient. Again, another really nice looking setup here. Really beautiful retest that we've had twice over. Market struggling to breach 133.40 means that bears are still in control. We have the sort of alleged floor down here, I would say. Great margin to trade. Breaker structure that makes perfect sense here as well across all of these highs. You'll see this. High 1, 2, 3. High 1, 2, 3. And then this one. So we just drag a zone right through there. Perfect breaker structure point. Short. Entry. Target. Stop loss. I mean, if you go for a 50% stop loss between the point of cash up there and the breaker structure, that's a 1 to 3.75. That's too great for me, so I'm going to go a little bit more modest. Maybe look at a 1 to 2.8 to a 1 to 3, somewhere around there. But again, really nice looking trading opportunity. Very high probability as well. It all looks good. So that low is down there. We will need to watch out for that one. We've also got one down there as well, which coincides with the fit. That's kind of like the median of this trading margin. A couple of technical risk factors at play here. I don't think anything to be overly concerned about. There's never really a need to be concerned. Thinking about longs, not really a huge fan of the longs on this one, frankly. We think we certainly have a little bit more of an opportunity for the short, so I'm going to just leave that as a short opportunity for the time being. Euro NZD, we've already got a couple of those. Euro yen. Nice no man's land on that one. Certainly look at a move back down to the previous lows at 182.20. I'm not completely sold on that. I would like to get a bit more Australian dollar in the basket. We've got the Aussie NZD. Maybe there's something we can mitigate with the AC. That's been a nice run. Coming up to the previous highs in a minute. So let's go up to the daily time frame here. Okay, so we've got high 1, high 2, high 3. Got this area down here. That can be the temporary floor that we'll utilize. We've got this area that comes right the way back here. Very nice area of money in the market. Oh man, yeah, really nice area of money in the market. Actually, super liquidity pool this one. We get a breakout above that, we're going to have a pretty nice clean run. Say right the way back up to around 99. So good trading margins on the top. It also acts as the median, doesn't it, in a way, because we've got the same exact margin down below. So let's go to the 15-minute time frame. We would need a 15-minute break close retest, okay? For the long. We wouldn't for the short, but we would for the long. So please be aware of that. Break close retest and then the continuation once the retest continuation gets underway. Probably looking at around a 1 to 2.5 for the long. For the short, no BCR requirement, just a breaker structure, and we have the breaker structure point, which is about there. And then we can take the short in the Aussie against the CAD at this level, going down to here for a 1 to 3. I am kind of not on the fence, but I do have a slight reservation about the short in the AC. That is only because we have looked at the possibility of a short in the Aussie against the NZD as well. The idea of this was to have something that I could buy into. I don't really want to short the Australian dollar again. If the market dips, I mean, if the market dips, what else have we got? Aussie, we've got NZD, JPY, USD CAD, USD Yen. I mean, if the Aussie NZD starts pushing lower, then the Aussie CAD is going to go with it. It's going to happen, and then we'll be in both of them. Wondering if we should perhaps have something a little bit more pessimistic, a pessimistic view of the AC, even though the AC is my preferable trading pair over the two of them. But I'm wondering if we should perhaps move the breaker structure point down here instead. We don't need to worry about that because that's news driven. That was the RBA event, so we shouldn't worry about that low too much. But if we move our breaker structure point down there, that is then going to still give us a really nice trading opportunity, and equally, if not even better, risk reward ratio. But it's also going to give the AC a lot of time and a lot of room to move and flex with the Aussie NZD. If the Aussie NZD gets stopped out because the market bounces back from somewhere, I would like to think the AC is going to have the room to breathe without triggering a trade, and then we can get in for the long on the top of that one. But on the flip side of that, if the AN really does pan out nicely and we do get going with that one properly, then we can double our money down here, because then we can, once the market gets going really nicely with the Aussie NZD, probably down to, this is around that margin. If you think about it, on the Aussie NZD, that's probably about the same kind of margin that we would see from there to there in the Aussie on the Aussie CAD. So by the time we get down to this area, we're then going to be looking at doubling up on our money. Yeah, I'm just going to double. Yeah, that's got no risk at all. So I really don't care about that low. It's probably a technical risk factor at around 96.40, but we'll have a little bit of money in the tank by that time anyway. So yeah, that's going to be the plan of attack for the AC. Done. All right, so we've got a pretty good basket. We don't have any euro instruments, do we? What can we have? I don't want dollar. I don't want NZD. I don't want CAD. It'll have to be the yen, won't it? Now remember, team, we already have the potential for a USD yen short. And the euro yen at this moment in time is looking short. So I've got to choose one or the other. Let's check out those dailies quickly. So we've got the daily time frame here. Okay, let's do some top down. Big commercial point of inflection. Huge commercial move lower. We've now ground all the way back up to this same level of interest. Haven't really broken the daily structure on this one either. And we have a really nice point of liquidity below price for it to go. So USD yen by no means is a poor opportunity. It's very good. Very, very good opportunity. If we look at the euro yen, that's what the euro yen looks like on the daily time frame. So we have a consistent series of lower highs being formed down here. We have a floor which runs along the bottom there. So that's kind of what we're looking like with the euro yen at the moment on the daily, which again is not bad. That's a daily pennant, kind of, in a way. So that's not a bad pattern on the daily time frame to see. What do you guys think? Let's have a look at Dookie. What have you sent in, buddy? Euro yen. Yep. Absolutely, man. It looks really nice. Yeah, it's exactly that. That is exactly what I would be going for, Dookie. Yeah. So you're on the money there, mate. Right on the money. Got this area liquidity in here. This is the breaker structure point. You're looking for, to clear the margins out between 182.80 and down at 182.10. So yeah, good opportunity there, Dookie, definitely. Braden, you say the USD yen. I think I'm inclined to agree, to be honest. There's nothing wrong with the euro yen. So I don't want to be in the position of influencing you to not go for it if it's something that you've been planning for a while. The euro yen is a good trade. I'm not saying it's not. But I've also been planning the USD yen for a lot longer. Euro yen would be an off-the-cuff position, would be from today. USD yen was in the pipeline from last week. If I go to the daily time frame, my thesis for this short idea is based on the fact that we have come up to a major commercial area of interest. We've seen commercials selling from this area multiple times in the past. It's what I do. So I'm thinking the USD yen as well. I'm unsure about the entry for it, if I'm honest. I think I might get a little bit more aggressive. Have my breaker structure point there, potentially. And look to take the trading opportunity slightly higher up. So therefore, my trade would look more like this than it did before. I would like to be able to get my stop loss above this area in here, in an ideal world, because that's a lot of the flaws in this current bit of price action that we've seen. So the risk reward ratio certainly wouldn't be on the high side. It's a 1 to 2.41. But that is ultimately what I'd be looking at there. And then we have our first TRF at 158.56. Second TRF situated around 158.34. And then it's a home straight down to the 157.92 area. And this is, again, as a direct result of reaching commercial interest. So I'm hoping that we'll get the big push away from there. Back down to the lows. Turtle hunting. Good man. Good man. Yeah, so let's download that one. Right, moving on up then. Gold. Gold has done very, very well, trading all the way back down to this pot of money here yesterday. We spent the duration of the day trading inside this area. I was hoping that we would have more of success moving down into the 48.60 area, but due to geopolitical uncertainties, gold is still being floated. We need things to ease in a certain way to see gold move down there. It is purely fundamentally connected. We won't see that if things don't ease. So we do have to make some kind of decision, and we have to stand by it. We have to be rigid in our sentiment. So the thing is, are we going to just go long if this breaks structure? And where are we going to go long to? Are we going to go long to here? Or are we going to go long back up to around 54? My kind of bias here is, could we look at another trading opportunity between the margins down there to be sure that if the market does run and not rally, we're still going to be able to earn something from it. And if I drag that across to the right hand side, so this would be the trading margin for the long, this would be the trading margin for the short. Again, looking to increase our exposure on both sides of the market, but also look at the time element of it, because we're not going to be hanging around in the market hopefully too long in order for these to complete. So we got trading opportunity number 1, and we will have trading opportunity number 2. Now remember, many of these opportunities, if they do not trigger or they are live but not in significant profit by the point of interest rate releases tomorrow, we will be having to exit them early. So I would really appreciate if everyone can remember to just touch base tomorrow, even if you're busy and you can't make the show. Touch base just to check in to see what's going on with the positions, because you don't want to forget about them. The BOC or the BOC or the FOMC come out, and then we end up throwing half of our positions or more in the bin as a result of poor management. The 15-minute range looked good for scalping. Yeah, I mean, it doesn't look bad for day trading purposes. Not too bad, but I honestly, I just don't. I think it's a time management thing for me personally, Dookie. If you can afford the time to sit there and trade each inflection point like that, then good on you. And I'm not going to turn my nose up at you at all for wanting to do that. I think for me, after 16 years, I don't have the drive to do it. I honestly, just being really bloody honest with you, mate. That's what it comes down to. It's just about having the drive. And I'm after this long, it's more about streamlining my trading processes as much as possible, so that I don't have to sit there in front of charts, and I can limit myself to it as much as possible as well. Also, I've got a very busy lifestyle. You know, trying to grow this place is many hours work, and the trading kind of takes care of itself at this stage. But I mean, throw me back 10 years ago, even 6, 7, 8 years ago, and I would have been happy to do so. But yeah, now I'm much more chill, much more relaxed now. So that's gonna be the process for gold this afternoon. Right, moving on up to our energy markets. Unfortunately, natural gas did collapse yesterday sort of afternoon. We did come down to the 3 level. It is having a bit of a pushback now at 310, but there's nothing we're going to be looking at with NG until we're trading up there, so I'm going to skirt over that. Looking at UK Brent this week, we've got a retest of our structural point. This is what I was anticipating would happen, so we actually came down here yesterday to retest once. We pushed away, we're coming back down to retest again. We want to see, in an ideal world, this level in here broken through. And what I'm happy doing is I am actually happy releasing a trading opportunity against this because we've got a lot of room to go, right? We don't really need to worry about anything because of the amount of margin there is for the market to move around in here. So I would say probably go for another 1 to 3-ish in UK Brent via the breaker structure access point at around 107.50. That is then going back up to the big commercial high at 117.50. So we can download that. Natural gas is going to be tagged as a pink. Right, and then that takes us into our US indices team. So yesterday was not fun for the US breakout. It was predominantly non-existent, especially for me. I struggled. It was not good for me yesterday. Looking at where the market is trading today, I mean, there's certainly some fresh opportunity out there. We've got this structural point in here, which then takes us up to the next available route, which is that one there. And that's at the 47.42 area. Nice margin of trade between these two areas in here. It's a sizable margin, and the market is already at a 0.4% daily growth change today. So what we're going to do is we're actually going to split the US 30 Dow Jones on both sides here. We've got the long, which is just going to be your sort of run-of-the-mill breaker structure breakout trade. That's going to be entry, target, and stop loss, which is going to be very nice and tucked in behind the scenes there for a 1 to 3.3-ish. And that's just going to be your simple breaker structure after the market opens and we get going. The secondary opportunity is going to be a breaker structure for a short. The structural point for the short is going to be off of the top of the open and close of those two candles there. And then the entry is about here with the stop loss, with the target profit and the stop loss. The stop loss is going to be about there. And that's going to yield you a 1 to 3.4. So very nice trade ideas on both sides of the market in there. But in order for the short to take place, just remember that we need to reach this area first. Whoops. I did not mean to do that. Let me go back there. So we need to reach this area and then come down to there. Okay. Red circle is mandatory. Right. Next up, NAS 100 or the S&P. I mean, the S&P is pretty clear, isn't it? I don't really see the reason not to get involved with the S&P considering yesterday's trading parameters. Obviously, yesterday's market open was absolutely shocking, but hopefully today's going to be a little bit better. We have already seen some improved movement today. Again, very similar to the Dow Jones. In order to trade the short, it is going to be a push first to 67.30, and then we see the dip. The breaker structure for this opportunity will be approximately there. Maybe just a touch higher, so there. And that's going to be your shorting opportunity between 67.24 and 67.07. To go long on the S&P today, yeah, I tell you, for a change, it's actually very similar to the US 30 Dow Jones, oddly. Your short is just going to be a breaker structure, plain and simple. And that one's going to be above the high, although I don't see this happening. I don't really see this happening. I think that's too much of a push in one small window of time. But I would say it's probably about there. So that's what you'd be looking at for the long. And just so everybody's absolutely crystal clear on the short, this is what I would be looking at there for the short. So that's about there. So you've got a 1 to 2.8 and a 1 to 2.2. Okay. So that's the kind of thing we're looking for today for the S&P and the Dow Jones. Very similar chart setups. Opportunities look clean. If it's anything that we do know, though, yesterday's market's breakout was pretty poor, so it's not going to be a clear-cut, easy session. I mean, we can hope it is, but I don't think it will be. On top of the exposure that we've got on both sides of the market for the Dow and the S&P, we've also got the introduction of UK Brent, gold on both sides of the market, Aussie CAD on both sides of the market, Aussie NZD short, cable short, NZD yen on both sides of the market, USD CAD as a long, and then the USD yen short. So we've got a really nice collection of trading assets, and with the inclusion of some indice trading with commodities and metals as well. So not too bad. Not too bad at all. It's a good day's work. So it's now 1:05. We've got 25 minutes to go before the bell rings for this afternoon's US Open. Please be vigilant with the US Opens, at least up until tomorrow evening with the FOMC. You know what it's like, guys. A lot of you have been around the block a few times now. You know what it's like in FOMC week. Markets can be a bit tentative until those events take place, as everyone's waiting for them. And that's about it. So, are there any questions or anything, guys, that I can help with before we wrap it up? All good? All good, yeah. Yeah, no problem at all, Braden. Most welcome, mate. Matthew, you're all clear. All good, Tim. Excellent. All right, guys. Well, listen, thanks a lot for joining me this afternoon. It's been a pleasure, as always, providing this service to you. And I look forward to catching up with you later on in the day to see how it all went. So take care, good luck, trade safe, and I'll see you then. Thanks, team. Bye-bye.